Hello, traders. Gary Wagner here, about 1:15 in Honolulu, 7:15 in New York. It is Wednesday, July 7, 2020, and this is the daily report for gold and silver. For the first time in a while, we have seen gold effectively close above 1,800. That is significant. The other thing, as we'll talk about when we look at our charts, is the identification of a golden cross. All of these items collectively are telling us that we could see a continuation of the rally in gold. We'll talk about that when we pull up our charts, but first to the price board. Now, for the fifth consecutive day, we have seen gold pricing closing higher, and with the exception of today, we have had a series of higher lows and higher highs. Today, we did get a lower high. However, there are technical indicators that are strongly suggesting that we could see higher pricing ahead. First is the fact that we have identified a golden cross in which the 50-day moving average has crossed above the 200-day. Secondly, since yesterday, we have closed above the 100-day moving average. We'll talk about that as we pull up our charts, but the question isn't whether or not we want to go long, it's what is the best available price for our entry, and that's something we will look at when we pull up our technical studies. This first chart is a simple area chart drawn from close only from the continuous contract of gold futures. A couple of things really stand out, and the first thing is where we actually found support, because that came in just below the 23.6% Fibonacci retracement at 1771.80. And then, of course, the second thing is the fact that we did get a golden cross with the 50-day moving average crossing above the 200-day, but what makes it completely unique is that price point occurs precisely at the 38.2 fib level of 1832. With the market currently trading above 18 at about 1803, our target in terms of upside potential has to be that particular price point, roughly at 1830. As you can see, we've converted the area chart into a standard candlestick chart. It is easy to see that we have had consecutive days of higher highs, higher lows with the exception of today, but definitely higher closes consecutively day in and day out. What impresses me the most is the fact that although we traded to a lower low than the previous low, I do believe that we have a great opportunity to see this market move at least to $1,830 before finding some sort of resistance. We are looking for the proper entry price, and we will send out a trade alert accordingly. While it is quite easy to see that we have been in a defined uptrend, we are looking at a Henkin Ashi chart, and the reason for this is to determine strength of trend. What we look for is the absence of lower wicks. We certainly have that, and good body size. Now, while they're not tremendously large, they are most certainly showing us a moderate to strong upside trend. And the last gold chart that I do want to look at on today's show is a bar chart with a different data set that we are utilizing for our Fibonacci retracement. On the former daily charts, we began at the top of 2088 down to this bottom. On this particular chart, we are beginning with the March 2020 lows at 1450 up to the top here, and so we can ascertain different levels in which we could see the market go to. We talked about the number 1830, but the 61.8% retracement comes in at around 1845, and 1950 would be an extreme move to the upside if in fact we saw an extended rally. Nonetheless, I am looking for gold to move higher in the next month. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.